My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be wondering, friends, just want to make you some money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After some terrific performance in the final weeks of 2019, well, what can I say? The averages, they got hammered today. Dow tumbling 234 points, S&P shedding 0.71%, Nasdaq losing 0.79%. As Wall Street started to worry about Iran. Now, when I went away for the holidays, I really wasn't expecting 2020 to start off with such a bang, as the U.S. government took out one of Iran's most important generals yesterday. Caught most of us by surprise. And the stock market hates surprises almost as much as it hates geopolitical instability. Which brings me to the game plan for next week. It seems almost certain that the Iranian regime will retaliate, although we have no idea how. And that's the big open question for Monday. Maybe they'll start more trouble in Iraq. Well, we know Iran's good at storming embassies. Maybe they'll shut down the Straits of Hormuz. Maybe they'll paralyze the oil market. Maybe they'll attack our allies in the region like they did Saudi Arabia. Maybe they will launch a cyber attack, which we are going to talk about later in the show with CrowdStrike. The truth is, we don't know. That said, we have so much oil in this country that there's not much the Iranians can do to wreck the global oil market. And we saw this when they blew up that Saudi oil refinery in September. You know, and it's also why Exxon and Chevron stock both ended the day in the red. Pretty stunning, isn't it? More on that later, too. So while the averages could get hurt on Monday, I'm urging you, please don't panic. No one ever made a dime panicking. Beyond the Iranian situation, we got some important macro data coming next week. Got to relate that to stocks at all times. It all starts with the Purchasing Managers Index of PMI numbers on Monday. That gets us the first snapshot of how the economy did just last month. I think we'll see a continuation of the same trend, decent growth, nothing too exciting, and that's the optimal situation for higher stock prices, because when things get too exciting and the growth is more than decent, the Fed may feel compelled to slam the brakes on the economy by raising interest rates. I don't see that happening. Why do I feel so sanguine? We got a new wrinkle in the data. People last year's rate cuts from the Fed are now working, and that should give us a nice boost. I know a lot of people hate it when the Federal Reserve gives us easy money, but these cuts stimulate the economy. They've also been responsible for a weaker dollar. I always have said it will work, because they always do. In my 40 years of investing experience, you know, rate cuts have mattered every time, except during the Great Recession, when they were a little too late. Yet every time the Fed cuts, there are a bunch of naysayers who insist it will do nothing. And you know what? Every time, they're wrong. They know nothing. Tuesday, we get durable goods. Now, typically, I don't focus on this, but you know what? This number has been fairly strong for years. Biggest durable goods? Airplanes. And the biggest airplane in terms of sales? Oh, Boeing 737 MAX. Now, we don't know if that plane will ever fly again. I need to consider that verdict within the realm, people. And I think that might be one of the biggest problems in the economy. My take, Boeing's new CEO, David Calhoun, needs to find a retired general. How about the major general from the Air Force? There's a general from the Air Force Academy that is retiring. How about them? Got great flying experience. A crisis manager, help get the story out correctly. And, well, let's just say they need to bring in a major, well-respected law firm to help earn back the company's lost credibility. And, boy, does the nation need that. In other words, Boeing has to start thinking about ways to make it so that the MAX isn't the MAX anymore. Even if it means, I know this is something, again, that people aren't considering, gutting and retrofitting every single one. Whatever approach they take, the company needs to stop insisting this is merely just a software problem. I don't think Calhoun can do this alone. But then, again, he doesn't have to. Not to be petulant, but why don't they listen to me for once? Previous CEOs sure didn't. Wednesday, we get the first big earnings report of the year, and many will consider them suspect. Let's start with the most suspect, Walgreens Boots Alliance, which remains crippled by the idea that it can't win in the front of the store thanks to competition from Amazon, and it can't win in the back of the store because of some major structural changes in the way we buy drugs. You want pharmacy exposure? Oh, go buy the higher quality CVS, which has its own pharmacy benefit manager, Caremark, and its own health maintenance organization, Aetna. It's got it all. Lennar, one of the nation's biggest home builders, also reports. Now, this whole industry doesn't get enough respect. Rodney Dangerfield here. Lennar is incredibly well run with seemingly endless margin expansion. And I think it's in a great position now that millennials are finally starting to buy homes in large numbers. Yet the commentary around them is always so boorish, and that's the B-double-O kind. It drives me crazy. And it's not just Lennar. The most hated home builder, KB Homes, just keeps rattling off along without much analyst endorsement, even, well, after multiple years. Again, I shake my head. What's the deal? We also get results from two of the most controversial stocks in the entire market, Constellation Brands, STZ, and Bed Bath & Beyond. Constellation is a former market darling. Investors love the beer and liquor company thanks to the strength of Corona and Modelo. But lately, consumers have moved on to hard seltzers. I hate them. And Constellation seems late to the game. Plus, their $4 billion investment in Canopy Growth, the big Canadian cannabis play, is looking, let's say, very different now that the market's turned against ganja. Unfortunately, legalized weed has failed to live up to its hype thanks to massive oversupply, the lack of a coherent U.S. market, and the new focus on the dangers of vaping, whatever that is. Well, Constellation has turned Canopy into a powerhouse of sorts. It's really a nice house in a really ugly neighborhood.
A house of pain.
That's the address. So let's see what they say. I think this company is too good to be written off. At some point, the cannabis industry will be worth dominating, but that might not be very soon. Then again, if one of the Democrats other than Joe Gateway Drug Biden ends up winning in November, well, legalization could be on the table. And you know what? That's going to turn this stock around real fast. How about Bed Bath & Beyond? BBBY? I think the recent rally here is all about a short squeeze. Most people don't believe that CEO Mark Tritton, late at Target, can turn this company around. They say it's too late. I'm inclined to be skeptical, too, although there are so many easy changes they could make, and the balance sheet is so robust that the stock makes sense for speculation. Giving up on this incredibly undermanaged chain right now just seems premature. Maybe this isn't the breakout quarter. It's too soon. You just got there. But if it gets hit, because it isn't, bye. Finally, Friday, we get the Labor Department's non-farm payroll report, and the most important macro number could change the market's whole trajectory. A too-hot employment number, and we'll immediately start factoring in a slew of rate hikes that never come. A too-weak number creates a cascade of hope for even more rate cuts that may never come. Good or bad, I think the stock market will exaggerate either forecast. That said, if stocks run too much into the employment report and we get a strong number, expect the average to get hit. As the Armageddonists, I can't get them out of my head, start arguing that the Fed needs to tighten as soon as possible. If that happens, I'm betting it'll be a buying opportunity. The bottom line, the Iran situation has given us something new to worry about, but the economy remains strong. So strong that let's just try to stay opportunistic, please, as we head into the first full week of a fabulous new decade. Let's go to Ann in Indiana. Ann!
Jim, welcome back.
Oh, thank you, Ann. It was great to get away for a little bit. I needed it. My family was very angry at me. My girls were saying, Dad, finally. And they're right, and I've been wrong. What's up?
So the CEO, as you know, from IDEX departed. So what thrust is best of breed in the healthcare and the humanization of pets neighborhood?
Well, it still works. You know, Zoetis has a new CEO, Ms. Peck. She's very good, very talented. And I'm inclined to buy Zoetis over IDEX Labs right now. I want the new CEO to come to the show. That would really help us. Let's go to Maureen in Arizona. Maureen.
Hi, how you doing?
You know what? I'm back from vacation. I'm ready to roll. How about you?
I'm good, too. Question for you. I am 67 years old. I have 145 shares of 3M stock, which is down 21.5%, and has been for almost 3 straight years with no profit. Should I sell it and buy more Amazon, which is up 33% in my portfolio?
Yeah, I think so. Now, I know that Steve Tusa, the really smart analyst over at JP Morgan, upgraded the stock from a sell to a hold. I'm not looking for a sell to a hold. I'm not looking just to make income, especially where there's some troubling, the dividend's fine, but there's some troubling pollution stuff going on there in terms of groundwater. Amazon, you know what? It's too good not to own. Now, I know the market always has something new to worry about, and we sure got it with Iran. But the economy remains strong, and that's what matters. Job growth, low inflation. Stay opportunistic. Opportunism It's going to be a theme again. Sorry. On Mad Money tonight, Iran has shown a talent for cyber attacks, and business could be a prime target for retaliation. As geopolitical tensions rise, how can the U.S. prepare itself? Oh, boy, I'm talking to the CEO of CrowdStrike to find out. We're going to find out about that Ukraine situation, the president, too. Plus, 2019 might be in the books, but knowing what separated last year's winners from its losers could be the key to a profitable 2020, particularly after today's decline. I'm going to dig into the stocks that dominated the S&P 500 and the Dow. And you know what? You don't need to be a Wall Street insider to spot the stocks that made the Dow go up so much. But will these winners take a victory lap? Are they sustainable? Or could new names take up the charge in the new year? We got to find out. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.